What was once dismissed as conspiracy has now been confirmed. The Federal Reserve is openly considering an official U.S. gold revaluation, a move that could rewrite the value of America's gold reserves overnight, create trillions in profit for the Treasury, and would have massive implications for the global monetary system, the dollar, and of course, your gold. But this isn't happening in a vacuum. The U.S. is facing the most dangerous debt crisis in our history. Foreign demand for debt is drying up, de-dollarization is accelerating, and history tells us that when governments run out of options, they turn to gold. And now the Fed is taking steps that suggest this moment might be closer than anyone thought. Just last week, the Federal Reserve released an official research note detailing how other debt-strapped governments have boosted their balance sheets by revaluing their gold without having to sell a single ounce. This could be the clearest signal yet that it's not a what-if scenario, but when. But all we really have to do to confirm this is take a look at the state of our debt. Right now, the U.S. has a debt to GDP ratio of 120%, meaning if you took the total of everything the U.S. produces in a year, our GDP, and put it towards paying down the debt, well, we still would be about 20% short. To put this into perspective, this ratio has only ever been over 100% during two distinct eras of our history. The first being World War II, 1940s at its peak. The second being today. Now, the difference is that in the 1940s, the spend was temporary, and it was followed by a post-war boom. Today, the spending is structural, and there is no plan in place for a rapid payoff. But not only that, it's expected to get a lot worse. See, the Congressional Budget Office, or the CBO, they anticipate that we're going to hit 150% debt to GDP ratio in the next 10 years. But many experts, and myself included, believe that number is conservative. We likely will hit it much sooner in the next couple of years, depending on the rate of spend and the interest on our payments. In fact, most of us have gotten so used to these massive debt figures that are thrown at us every day that we have gone numb to just how big they really are. In 1971, when President Nixon officially delinked the dollar from gold, the U.S. debt was sitting at around $390 billion. Today, we're looking at $37 trillion, and the difference between $1 billion and $1 trillion is massive. If you took $1 billion and stacked it high in $100 bills, that would be about half a mile high. If you took $1 trillion and stacked it in $100 bills, it would reach 670 miles high. Another way to think about it is time. If you went back in time 1 billion seconds, well, you'd end up in the 1990s. If you went back in time 1 trillion seconds, you would end up in the Ice Age. Now take that difference, that $1 trillion, and multiply it times 37. That's the scale of how big this debt crisis is. So what does the U.S. do next? Enter the Fed's gold revaluation playbook. See, a gold revaluation is not a new concept here in the United States. Back in 1933, the U.S. was facing an economic crisis, and the crooks in charge came up with a brilliant plan. Confiscate all of the bullion, collectible and rare coins were exempt, offer a premium for that gold, so when people turned it in, they got more dollars and felt like they were getting a good deal. But then once the government had all the gold, what did they do? They turned around and revalued it higher, meaning that it was an immediate devaluation of paper currency. Everyone who held dollars lost wealth, while everyone who held gold gained wealth. But what's being floated today would operate a little bit differently, not just because people have learned their lesson. Please tell me you've learned your lesson. Do not trust government paper promises. And if you don't already own gold, no matter where you get it from, make sure you have it, of course, from a trusted source, because like I said earlier, gold has different functionalities in the confiscation story. You want to make sure you're getting the right gold and silver for what you're preparing for. But it would be different because today the gold reserves in the United States are valued at $42.22 an ounce, last valued in 1973, meaning that the total gold reserves for the United States are only on paper worth about $11 billion. This is obviously grossly undervalued when we know that the spot price of gold is closer to $3,400 an ounce, meaning that if they were to revalue to market levels, well, then we could see the gold reserves be worth closer to $750 billion, which is a huge jump up from $11 billion, but very likely they would not stop there. In fact, they could revalue much higher. While an extra $739 billion is nice, believe me, it's better than a kick in the you-know-what, it doesn't exactly bring down our debt in a meaningful way, right? It would be about 3% knocked off of that debt to GDP ratio. We need a bigger shovel. And while some might say this is crazy, $10, $20, $50, $100,000 an ounce revaluation, crazy times and crazy debt calls for crazy measures. But how would a gold revaluation work today? Well, the beauty is that no gold actually has to be sold. See, all the Treasury has to do is scrap their $11 billion gold certificates, give the gold to the Fed, set a higher price, a much higher price, at which point the Fed then gives the gold back with new certificates, and boom, the Treasury has instant profit. No new debt, no tax hikes, just profit. And the beauty is that anyone out there who's already holding gold would benefit from this new price floor for gold, which is why I have been telling everyone who will listen that now is the time to buy gold. If you don't have some, get some. If you already have some, get some more. And I'll talk more about strategy in a second. But this is also why many have dismissed this notion as never happening, as a gold bug's pipe dream. But the reality is speculation around this has been growing for quite some time. This year in particular, things started off with some very interesting comments. Now, U.S. Treasury Secretary Scott Bessent is a known gold bug. He came out earlier this year talking about monetizing the asset side of the balance sheet.
Monetize the asset side of the U.S. balance sheet.
That's where this kind of caught wildfire. Now, many point to the fact that he then later came out and said he wasn't explicitly talking about gold, but would you want to come out and tell everyone that you were going to revalue something before you did it? That's just not smart business sense. We also have President Donald Trump, who's been dropping clues throughout his presidency about gold and gold's role in global power. But it's not just statements from the White House either. The COMEX and the LBMA, historically used for market manipulation and metal derivatives, have seen record delivery requests, meaning that it's no longer about paper, it's all about the physical. And this is coming from institutional buyers, people in the know who understand that gold is being positioned at the center of the new monetary system. A new monetary system that could be here much sooner than most people realize. If you don't believe me, go ahead, go online and look up de-dollarization, especially over the last 3 years, a global move away from the dollar at the center of the system. And you will be shocked to discover how this movement has been turbocharged ever since the 2022 weaponization of the dollar against Russia. When Russia's U.S. foreign exchange assets were frozen and seized, well, the rest of the world realized that the dollar is not neutral. It can be weaponized against any of them, which spurred a movement away from fiat currencies in general and towards real tangible assets, such as gold, which is why gold has overtaken the euro recently as the second largest foreign exchange reserve. Desperate times call for desperate measures. And yes, the United States is desperate. Don't let anyone tell you otherwise. Foreign buyers are moving away from our debt as they lose interest in our debt. Well, the United States needs these buyers in order to keep the Ponzi scheme running and operating. Without the buyers of our debt, well, then we lose the illusion of stability and prosperity that we have built. So could a gold revaluation be the solution to our problem? Well, that remains to be seen. The Fed is trying to answer this as well. In their new research note, they studied 5 countries who have undergone gold revaluations in the last 30 years. Now, all of them did see a short-term boost in profit that helped with the debt, but not all of them were able to claw their way out of the overwhelming structural issues they had as a result of overprinting. For example, Lebanon was able to use the profits to pay off a chunk of their debt, but they could not stop spending. And as they continued to print, inflation continued, leading to hyperinflation. And eventually, they actually devalued the currency, revaluing it. They call it lopping off zeros, where let's say you have $1 million in the bank and they chop off 3 zeros. Well, now you're left with $1,000 because they said so, because they can with fiat currency. That's how it works. So everyone who held paper assets, well, they were worth nothing, next to nothing. Everyone, though, who held gold through the revaluation and the currency collapse, well, guess what? That gold went up tremendously in value compared to the failing fiat currency. So everyone who held gold not only protected and maintained their wealth, but actually came out on the other side, not only surviving, but thriving. Which, before I get back to the US, if you're a history buff like me or curious to learn more about how gold and silver respond to these currency collapses, we have an incredible resource. It's totally free. It's called the Built to Endure report. If you have not already downloaded your copy, do it right now. Scan the QR code, click the download link in the description below because it has 100 years of historical data and how different currency resets have happened throughout history, where we are today, the signs and the timeline of where we are today compared to these other failed currencies, and of course, how gold and silver can protect your wealth through these currency life cycles. So while I can't say with certainty how a gold revaluation would fare long-term for the United States, because I, like I'm sure many of you, believe that our problems are a little bit too far gone, could it be a short-term fix? Sure. Do I think it's going to change the structural damage that's already been done? Not likely, but I try and be optimistic, so I don't want to come out here and say with certainty no. But regardless of how it plays out for the United States, one thing is very certain. The fact that they are considering this, the fact that we are running out of options just shows us how close we are to the end of the current dollar life cycle, right? The dollar is the global reserve currency. We are running out of options, which means that anyone who is holding dollars, be careful. Be careful out there with your savings, with your investments, because those dollars are only going to be worth less. Now, anyone out there who has gold, this is good news, right? Because it means that gold, it's going to create that new floor. Like I said, we could see gold's price go up tremendously. It means that if you don't have gold, now is the time to get it, right? Make sure you're positioned now. You don't want to be trying to get positioned after this happens or after it gains more traction on the mainstream, right? Right now, it's kind of a unique opportunity where everyone who's paying attention to this knows it's being talked about, but the majority of people right now in the United States are not paying attention. At least that's my thought on it. So make sure you have a strategy in place. If you don't, or you want a second opinion, or you just have questions about all of this, talk to one of our expert analysts. They are here to help. They have helped so many people over the years. They have over 30 years of experience helping people just like you prepare specifically for currency life cycles as well as different threats to the system. So whatever it is you're concerned about or what your goals are, talk to one of our team. They are the best in the business, and I'm not just saying that because I work here. I talk to them every day, and they are incredible. I learn from them constantly. So you can call us at the number below. You can click the link in the description to set up a time that works for you. Whatever is easiest, scan the QR code. Doesn't matter as long as you make sure that you are protected with physical gold and silver outside of the system, outside of the dollar, because whatever's coming next, we know it will not be pretty for the dollar. So as always, thank you so much for being here. I'm Taylor Kenny with ITM Trading, your trusted source for all things gold, silver, and lifelong wealth protection. Until next time.